Let's be honest, reversals are the best trades in the game. One good reversal can make your whole week. And when it works, you feel like you saw the whole move before it happened. That's why everyone wants to trade them. But here's the problem. Everyone gets absolutely wrecked trying to trade them, and they end up red instead of green because they think reversals are about being early. But reversals aren't about guessing tops or bottoms. They're about recognizing the pressure shift, when the market flips control and shows you who's actually in charge. It's about catching the meat of the move, because that's where the real money is made. So in this video, I'm going to show you exactly how to find and absolutely nail the real reversals, while avoiding the fake ones that nuke your P&L. Most people don't know this, but there are 3 types of reversal trades. The first 2 are what most traders think reversal trades are, and it ruins them. But the last one is rarely talked about, although it's by far the most reliable and profitable of the 3. Most traders get trapped in the first 2, or think it's the third one when it actually isn't, and lose a bunch of money trying to trade reversals. But if you know what to look for, avoid the first 2, and only trade the third type, reversals could be a serious money printer. So the first type of reversal is just straight up trying to time the top or bottom. This is the highest risk-reward type of reversal, but also the riskiest. It's not advised to take this kind of trade because it has such a low success rate that it doesn't even make up for the reward you gain from it. I can't begin to tell you how many traders' careers have been flattened by trying to catch the top or bottom. So if we're in an uptrend or a downtrend, and the trend structure is intact, it's a bad idea to trade against it. There's so much more money to be made trading with the trend than against it. And the trend can go on for much longer than you think. As long as we're making consistent higher highs and higher lows in an uptrend, there's no reliable way to know when it'll stop. Despite how overextended you might think it is, you can't predict when it'll end. So that's the first type of trade. High risk, high reward. Although some may call it high risk, no reward, because of how unreliable it is. I'd say don't take this type of trade at all, especially if you're serious about building a career as a professional trader. It's not worth it. Now, the second type of reversal trade is the break of structure. This means, for example, we're in an uptrend and we drop under the previous higher low. This is a much more clear break of trend structure. We now have some confirmation that the move is serious. It's a much clearer indication than in the first type, where we had zero confirmation and we're basically guessing. So if the market is making higher highs and higher lows, it's in an uptrend. Now it's broken under a previous higher low, which no longer makes it an uptrend. Now what a lot of traders do is jump in short here because they see that the uptrend is broken and want to get in to catch the drop that comes from the downtrend. But this is an absolutely fatal mistake, a mistake that even advanced traders make. Here's why. The price has 3 phases. It has an uptrend, which is higher highs and higher lows. It has a downtrend, which is lower highs and lower lows. And it has a range, which is everything in between, roughly equal highs and lows, let's say. And this is super critical to understand. An uptrend cannot directly transition to a downtrend and vice versa. An uptrend can only transition to a range, which can then transition to a downtrend. So let's look at this example. If we break under this higher low, some might think that the uptrend structure is broken and try to short it. But what if this happens next? You see, we never got confirmation that this would go lower. This move has now transitioned to a range and could simply keep moving sideways until it shifts back to uptrend. We did not get a downtrend shift at all, and everyone who went short here is now underwater, because we have a series of higher lows and higher highs. Then we break structure here and get a lower low. But in order to confirm the trend change and the transition from range to downtrend, we need to get a lower high first, and then break under this low. That's what finally confirms the downtrend shift, and that's when we finally have enough overhead structure for a proper move lower. And that's the third type of reversal trade, which is a break of trend structure, then waiting for a lower high to form, then breaking under this low to confirm the range breakout and trend shift. This one has the most confirmation, the highest probability, and the least likely chance you'll get trapped. And if you do it correctly, you can have all this and still have a risk reward that's off the charts. But it's important you know the difference between these 3 types of reversal trades so you can actually catch the best ones and don't decimate your P&L with the bad ones. So now I'm going to show you a real-life example of how to find and trade a Type 3 reversal on ES futures and how to avoid Type 1 and Type 2. So this is a chart of the S&P, and this is a level-to-level setup. What that means is we've marked out supply and demand levels that the price is attracted to. And this way, the price moves from one level to another like a magnet. And what this does is that it makes it really easy to see where the market is moving next based on each leg up or down. We know exactly where to enter and where to target on each leg of each move. And this helps tremendously with trading in every way possible. So If we're in an uptrend, for example, and we want to enter on a break of a previous high, we know where to target. Pretty much all I talk about on this channel is how to find these levels and how to trade them so you can easily profit in the market. I'll link some videos right now explaining that in more detail so you can watch them later. But when it comes to reversals, this is how we go about finding them and trading them. So this is on the 1 hour chart. Now, just from what you see with your own eyes at a glance, what phase of the market are we in? Well, let's do a quick assessment. We have a higher high, then a lower high, then a higher high, then a lower high, and then a higher high. So by definition, we're in an uptrend, right? Although these last few legs look a little weak. These are definitely not strong upswings. It looks like the market might want to break down. So now that we've made our higher time frame trend assessment, we can zoom into our execution time frame to get a better look and finally execute our trade. On our execution time frame, which is the 5-minute, we see that the price has been following the pattern of higher lows and higher highs, but it's recently come to a halt. And in fact, we've now dropped under a previous higher low, which indicates that the uptrend structure is broken. Now, in our level-to-level system, we need to decide whether the price moves to the level above or the level below first. And to make the right decision and get the highest probability that it works in our favor, we don't just guess. We use trend structure to determine which direction we're more likely to move in. So here, theoretically, we were still in an uptrend, and our bias should be to move higher. We had higher highs and higher lows. But now that's broken with this most recent move. So now what direction is more likely? Well, it feels like the uptrend is finally coming to an end and we're finally ready to reverse. That means we're expecting this to move lower instead of higher, right? Well, no. Based on what we discussed before, this would be a type 2 reversal trade. We've broken under this higher low, which means we're no longer in an uptrend. But remember, we can't directly transition from an uptrend to a downtrend. That means we're in a range now by definition. And a range doesn't have a clear direction or bias to either side, which means we can't make a proper decision yet. We either wait or trade back into the range. If we're looking for a clean reversal trade here, it's best to wait until we get a lower high, then a break of this low, to finally confirm the shift to a downtrend. Then that would make it a type 3 reversal, which would put probability way more in our favor. So let's see what happens here. And as you can see, we didn't get our reversal. The price simply ranged a little, then made a higher low and higher high, and shifted back into an uptrend. If you would have taken this short based on a type 2 reversal, you would have gotten blown out. And that's why it's absolutely crucial to know which phase of the market we're in and how to trade it. Because trading the wrong setup in the wrong phase will burn you pretty much every time. Outside of some black swan events where the price just explodes in your direction out of nowhere, you'll want to be trading on the side of probability. Remember, we're professionals, not gamblers. And if you want to be a serious trader and make money out of this long term, this is how you stay in the game and become highly profitable. Now let's look at another example. This one is actually the next day from the previous move and happens at the exact same level, so we can directly compare them. Let's go through the same steps of reading the trend structure. We saw that we climbed higher here, tried to break above the supply level but couldn't. Then we started slowly slipping downward and had a clear structure break here. So we briefly went into an uptrend again but failed and then broke under. That puts us in a range, right? Now look what happened here. We tried to break into supply again, but it got rejected and we fell lower. The same thing happened on the day before, but we never managed to break under the low and actually continue the move. We just stayed in a range. But now, if we break under this low, a downtrend would be confirmed and we could finally go short. So for now, we do nothing. We just set an alert under this low and wait. You shouldn't even be looking at what the price does in between. The best idea is to actually close your chart. Now let's see what happens. We broke under this low with a strong, violent candle. The candle pattern itself doesn't matter all that much, but what's important is that we finally broke out of the range structure and we're now officially in a downtrend. So we enter short here with a stop right above these highs and our target at the next demand level. If we move all the way out of supply and back up here, we can assume the move is wrong and that our trade is invalid. Worst case, we can simply re-enter at another break of the lows. So that's how you want to treat your stop. From here, we just take our hands off the mouse and let it play out. And here the reversal actually worked. So notice the difference between these two. In the first example, the trend never actually shifted downward. It simply shifted into a range and kept us stuck in that range. Someone who wasn't reading trend structure might have shorted this and ruined their P&L, but we know better now. We wait for the reversal to actually be confirmed with a clear downtrend shift of a break of structure. lower high, and then lower low. That gives us the highest probability and will keep us out of most fake reversals. And when you avoid a certain type of trade with a higher loss rate and only take a trade with a higher win rate, then your P&L will be a lot more green. That will compound over time and give you enormous amounts of profit compared to being stuck in break-even jail by just trying to take every trade. Because avoiding the wrong trades is just as important, if not more important, than taking the right ones. By the way, that's exactly what I help traders build inside my mentorship. It's an 8-week private program where you'll work with me directly. We'll build a custom plan around your trading. We'll have one-on-one calls where we break down your trades, your mistakes, and fix your edge, as well as a private chat where you can communicate with me at any time. I'll also give you access to this exact level-to-level chart that you can use in real time. So if you're interested, click the link down below to apply. And if this video finally clicked it for you and helped you trade reversals, then be sure to leave a like and hit subscribe because I drop videos exactly like this every week. I'll see you in the next one.